Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today is a Tuesday strategy session for the Forex and futures market scan. Right now I'm watching the U.S. 500 and U.S. stocks come off of some really dismal lows that were sparked by a surprise jobs release. Right now, our economic calendar is completely in flux, and I'm going to talk a little bit more about that in just a second. But we're going to look at some Forex pairs. We've got some trade ideas to look at. We've got a lot to cover. The Saudi official royal family, the Saudi crown prince, is hanging out in the White House today. Since that meeting began about an hour ago, we've seen a big-time rally in stocks off of some really dismal lows. We've seen U.S. oil all of a sudden. U.S. oil spiked from underneath 60 back above 60. Remember that $60 level in U.S. oil. WTI is the point of control. No question about it now. Think of a point of control as just being an anchor in the middle, and price goes up and it gets sucked back down. And price goes down and it gets sucked back up. Right now, $60 is the 10,000-pound gorilla in the room in the crude oil market. To be honest with you, I want to take a short really bad. I just don't think that now is the time. I think you're going to get burned because we're not moving anywhere from 60 until we see action in Venezuela. So we're going to talk about that. We're also going to look at the dollar Swissy. The dollar Swissy is blown up. All of a sudden, safe havens are getting hit a little bit. Gold's up about 0.75%. A little bit of topside resistance right around 4,075. Watching that earlier today. Silver getting some legs above 50. The big story today, though, is the VIX, the volatility index. It was up about 12%. Now it's up 5%. A lot going on here in what I would call a whipsaw session for professionals only. There was a lot of ways to get killed trading stocks today. It looks like I may have got the bottom of this thing. Earlier today, we saw some 78% retracements hit on the weekly time frame. I'm going to go ahead and pull those up for you as well, and we're going to look at our trade ideas, one of which addresses the U.S. 500, the other the Aussie CAD trade coming into view. So I'm excited. I'm always excited to be here. I love Tuesdays. Tuesdays are always a lot of fun. Over the last, 15 years, my trading career, I found that Tuesdays and Thursdays are typically my money days. Wednesday's pretty good too. Monday can be a challenge. Friday can be a challenge as well. So good to see everybody back in the room and out there on YouTube land. Ahmed, hello Shane. I hope you had a good trading day. You know what we say about hope, Ahmed? Not when it comes to trading. Hey, hope in real life, that's great. Hope for your football team to win, that's great. Hope in the markets is deadly. Hope's for children and losers when it comes to trading. So I appreciate your kind sentiments, but if you find yourself hoping your trade makes a comeback, you're in big trouble. Typically, that's the way that it works. But I do appreciate the sentiment. Team Marina, hi Shane. Hey T, always a pleasure. If you guys have any questions or markets you'd like me to look at, throw them in. Today's the day to do that. And Tina Zhang, good to see you, Tina. Welcome. As always, over in the How to Trade community, Bobby Bob. Good to see you, Bobby. Welcome. Andrea Garwal. All right. Let's go ahead and get with it. I think that we've got some good stuff to look at here. I want to get right out to price action and what's becoming one of the biggest stories of Q3, Q4, whatever it is, of 2025 has been the massive sell-off that we've seen this fall or this autumn season in Bitcoin. Now, Bitcoin is always an enigma. Nobody really knows what's going on with the price of Bitcoin. Typically, when it trends hard. And right now, we're starting to see that action that really worries pretty much the entire trading community. You're seeing back-to-back bearish months and a big-time pullback. We had a great comment during the overnight. Lita, good to see you, Lita. Thanks for joining us. We had a comment during the overnight in the live chat, and it was from Bluefin. And he said, I mentioned a few weeks ago, 5 waves up on the Bitcoin monthly. Pullback from wave 5 is often to the bottom of wave 4. That's around 80,000. It's an astute observation. And what Bluefin's talking about, there's Elliott wave. He's talking about Elliott wave counts. As far as measuring pullbacks, I tend to lean on Fibonacci retracements as opposed to the bottom of wave counts. But listen, if you're an Elliott wave practitioner, there are a lot of different ways to approach the wave. I do it on a very simple basis. 1s, 3s, and 5s move, 2s and 4s are pullbacks. If you don't understand any of that, don't worry about it. Don't worry about it. A lot of people believe Elliott wave's antiquated anyways. I don't. I think there's some merit to it, and definitely when you look at a long-term Bitcoin chart, you can see exactly what Bluefin's talking about. I mean, this is a wave count, no question. Compression, break. There's your 1. There's a 2, that's a pullback. That's a 3, no question. That's a 4 pullback. There's your 5, and now we're looking to pull back somewhere down into the guts of this last wave, this pullback, this 4 combination with the 5, and then you're looking to pretty much rebuild or restart a fresh Elliott wave type of a progression. Now, from a pragmatic standpoint, calling the bottom of this move is tough. It's difficult because we're talking about Bitcoin and we are in a bull market. There's no question about that. You're starting to see as stocks move higher, Bitcoin is getting dragged along for the ride, at least today. You're still negative. Everybody's still negative. I mean, Bitcoin's up about 1.5%, but stocks are still getting hit. So we're really at a point of flux where we don't know whether we're going risk on or risk off. 4 big market drivers, I would say right now that we've got to watch. Now, can you pragmatically trade these things? Probably not. But you need to be aware of them because today is an important session with regards to our news cycle. We're going to talk about that here in just a second. This area right in here, this 95 area, this 94 area, 62% of the monthly is under heat. It's taken major heat. We dipped underneath 90. That would have been a really difficult position to hold, at least this time around. 78% down around 85. That was the area that we highlighted yesterday in Bitcoin. Pretty good level. Pretty good level. I think that if you wanted to get involved and maybe make a trade or make a play, 85.5, 87.50 is a pretty darn good long level to maybe take an intermediate term trade and hold it. So I'm looking at that as being really the robust downside support for Bitcoin. As far as the rest of the news cycle, we covered Bitcoin in our Switch Markets newsletter. If you guys don't get it, reach out to live support over at Switch Markets. They may be able to put you on the list, or demo accounts, open a fresh account over at Switch. You guys pretty much know the deal. We're trying to bring as much value to traders as we can. One thing that we do is we put a weekly newsletter out. It gets beamed right to your email inbox. We talk a lot about Bitcoin in this last one. Also, we have a video out on the Switch Markets YouTube channel. Be sure to check that out. I give you sort of my view on Bitcoin. I also look at silver and NVIDIA stocks. So when you go over here, be sure to check out these resources. There's a lot here. Learn to trade. I get asked this every single time. Shane, teach me to trade. I got asked this question today. And I said, great. Watch a live stream. Listen to what I'm saying. I talk fast. You're not going to know what I'm saying. It's okay. Get around the markets. Start talking trading with people that trade. Start looking at charts. Start watching videos. Absolutely huge. Free Trading Journal template, a great place to begin if you're having trouble establishing consistency. EA tools if you're more advanced. And then, of course, we've got all the tools you could ever use. They just launched a bunch of these. I was actually looking through them. We've made some videos that are going to come out. There's a lot there. So if you're having any trouble with position sizing, managing your risk, you've got a lot going for you over here. Check it out. That's sort of what I would highly recommend. So if you're building a Bitcoin trade, you could definitely be looking at the Bitcoin USD. That's potential. Also, there's not E-mini, but micro Bitcoin futures, which is also a great way to trade these things with a little bit of a reduced leverage. Fascinating market. I like Bitcoin because I like volatility and I like action. And that's no secret by now. Everybody knows I like action. I like markets that move. Bitcoin's moving. To be honest with you, I'm kind of looking to buy a bottom there. So that's sort of my progression moving forward. Let's see. We got the live chat blowing up here. Let's see. Tina, need an edge, not hope. Absolutely. Tina, I couldn't have said that better myself. You need an edge, not hope. Now, your edge can be a lot of different things. It doesn't have to be just a strategy. It doesn't have to be a 920. It doesn't have to be a 9 EMA. It doesn't have to be Fibonacci's. It doesn't have to be anything. You can actually just get really good at reading price action. You really can. And that takes a lot more time. Some of the things that I talk about with volume and market profile, I've been looking at those things for years and years and years. And so we don't really focus on those because it's really advanced stuff. It's difficult stuff. Your edge can be you too. Once you're in the market for a while, I mean, you can sit back and say, I am the edge. I know what I'm going to do. I know what I'm going to do when these markets come my way. I know what I'm going to do when these markets move away from me. You can be your edge. That's what a good trader is. Essentially, a good trader is an edge. We talked about B-booking yesterday. Was asked a great question. What's an A-book? What's a B-book? A-book is when your orders and everything goes to the market. B-book is when your broker bets against you. And I said the best way not to be B-booked is win. Beat your broker. Be a good trader. Take a lot of pride in that. I remember it was in the sports gambling arena, but one of my biggest, I guess, arrows in my quiver was when my bookmaker, online bookmaker, they cut my limits way down. They said, no, we're not going to play with you. We're going to cut your limits down. And I started laughing. I laughed at the guy. I said, okay, whatever. It was the best compliment I ever got, at least with speculation. Trading's the same way. If somebody's B-booking you, start winning trades, they will not B-book you anymore. It's that simple. That's the way that I look at it. I don't really see B-booking as a bad thing. So a lot of folks sit around and go, oh, you're betting against me, you're cheating me. I go, I hope you bet against me. line up. And I just said the naughty H word, the hope word. But really, I mean, as traders, it doesn't matter who's taking our trades. Somebody just has to take our trades. If they take the other side of our trades, we're licking our chops and we're ready to go. We're ready to go. So I hope that. Let me see. 54 Cattle Company. Speaking of football team, Boomer Sooner. Oklahoma coming off a big win down at Alabama. Oh, that was a fantastic one, wasn't it? I bet you everybody's just beaming down there in Norman. And that was a big win. We have a big game here. I'm going to talk about it later in the week. But we got to get back out to price action, do a few things here. But big game here in Montana on Saturday. Cat Grizz game. Brawl of the Wild, 137th meeting. I will be there. Tickets are going for about $500 a pop now. I've got season tickets, so we're already in. It's going to be a lot of fun. Can't wait. Love football. All right, let's see. Shane lives on the wild side. I have been known to. Andy Tong, good to see you. Let's see. John, hi, guys. I see the newsletter every day. Really helpful. Great, John. That's fantastic. Good to see you. Lewis, always a pleasure, Lewis. Yep, you're beating them. What do you expect them to do? They don't like to lose. They don't like to lose. Oil trade just triggered, so you went long playing that breakout, Tina. All right, we'll keep an eye. Remember, big event, Saudi Crown Prince at the White House right now. That is going to dictate a lot about what happens to crude oil. That's absolutely huge. You should be a football coach, Steve. I was a baseball player in college, but I did play football. In high school, I had an opportunity to play quarterback and free safety. Had a lot of fun, played with some great players, some guys that went on to play D1 ball. My talent was in baseball, but coaching's an interesting thing. A lot of money in it these days. These kids are making a fortune coaching. All right, Great Britain pound, Australian dollar. I know a lot of folks are involved in this market over the past 7 days or so, and you can see what we had here. This is just sort of a real rudimentary Fibonacci retracement sequence. Weekly chart. I love my longer-term charts. Weekly right there at your top, right around 208.38, somewhere down in there, 199.5, somewhere in that zone, and then you had an opportunity potentially to sell that 38%. So that's absolutely fantastic. If you got that trade, that's great. That sell right around, 203.10, something like that. That's good stuff. So that's a fantastic. The trend is still technically bearish. This is what I would call an L formation. That's a downside move followed by sideways compression. Top side resistance rules here. So if you get another shot at that 38, probably pretty good. Keep an eye on the gold market. Keep an eye on the pound. We've got some news facing the pound, I believe, a little bit later this week. It's going to be our UK CPI. I'm going to talk about that in a second as well. So be careful with this pair, but if you've already hit it, great. Australian dollar, New Zealand dollar. This one's one that, I could sort of show you some analysis. Monthly chart, the bottom line is you're extremely bullish here. So if you're going to be looking to trade this thing, you've got to bring it down probably to a daily. Let's go look at a daily chart. Aussie Kiwi. Okay, there's sort of your pullback. You can see our long-term levels here. What would we really be looking to do? For me, on a daily, you've got compression, you've got big volatility. Now we're sort of rebounding off of these lows. I'm not really overly excited about anything I see here. I think a weekly, if you wanted to build another Fibonacci retracement, and it's a little more challenging on MT5, but still a great order entry platform if you're sort of interested in that type of thing. 50% retracement. That's big. This market is sort of flat right now. It's sort of loading up. Remember, as markets move, then they load up, and they move again. So definitely be careful there. I think that you've got an opportunity potentially to play maybe to the long side, but I want to see the price really load up above 38%, and that's going to be really predicated upon what the gold market does. When you think Australian dollar, you need to be thinking gold. You need to be thinking copper and iron ore. Not so much silver, gold, copper, iron ore. As the price of those commodities move, typically you see the Australian dollar move as well. All right, US dollar, Japanese yen. This is a 4-hour chart. We're going to go over to our trading view and really hunt for a trade here in this dollar yen because I love the way that this is setting up. 4-hour chart, absolutely love it. But what we've got to do is we've got to get a pullback first. We're going to go ahead and look at this on our 920 and potential pullback area. Dollar yen, definitely on the move. Some macro levels may be up ahead, but I think that we may be going much, much higher as we get later in the year. As soon as people believe that we're not going to cut interest rates again here in the United States, they believe that, okay, it was a 50-50 chance. We're probably going to hold firm in December now. We don't really know. Thursday's jobs numbers are going to be a huge catalyst for really behind those expectations. Whatever the jobs number is, really maybe will dictate the next Fed meeting. And I say maybe because I got to talk like Jay Powell. He says nothing. What did I just say right there? I said, listen, if we get a big number on NFP, maybe a big negative number, that's going to force a potential rate cut. We think it's already going to be negative. The markets are pricing in a negative NFP. So if it's positive a little bit or even, maybe we just wait and see what happens. And that's what the Fed's thinking right now. They're weighing do we cut rates? Do we hold them firm? And right now the market genuinely doesn't know. However, we do know this. We know that the Bank of Japan wants to cut and get back in a negative deposit range as soon as they possibly can. Probably not going to be this year, but maybe it will be. We don't know. What does all that mean? It means that people are favoring the dollar with the new hawkish policy over the yen, and that's really been the catalyst behind just a big move over the past several weeks. So what do you have here? I want to get long. Any way that I can, I want to get long. So let's go back over to our trading view and see if we can spot a trade here. Let's go to our dollar yen. This will be just a straight Fibonacci play. You can see the monthly. Interesting sort of a situation here. You know, if you're interested in trend lines, long-term trend lines, I sort of take this with a grain of salt, but something like that. You could probably say, okay, you broke above that trend. You know, you even could have maybe done it down in here a little bit lower, something like that. I think that could be problematic. I probably would have hooked it to last month's high just because you got a triple touch. Remember, the third touch is what it's all about. You either act right here as resistance or you break through, and right now it looks like we've broken through. That should lend a little bit of credence to our top side bullish bias. I laid out the fundamentals for you, what we think the Fed's going to do, what we think the BOJ is going to do. Now, from a technical standpoint, okay, that sort of trend lines are, okay, that one's out of here. Let's talk about how to trade this thing. Well, we got a little bit of room right now for an intraday trade. So let's go to our 4-hour chart. I'll go ahead and open that up. Something like this is interesting to me. Compression, right around 155, somewhere in there, 155 and a quarter, and then you get the big break, yeah? Well, okay, now what are we looking to do? You want to buy a pullback. No question. Spike low right there. If you could get a swing high to set up, and then it's just pullback time. That'll be great. The problem is are we going to get a top to set up? It's going to be problematic. So you're probably going to be looking for a pullback somewhere going into the Tokyo session. If it develops later in the U.S. session today, that's like a gift. You know, it's not quite Christmas yet or not quite the holiday season, so I don't know that we're going to get any presents today. But if this thing sells off like down to 38-ish, that's pretty good for a scalp. We had a question about tick scalping. That would be a tick scalp for me. I'd be looking for like 5 pips, 8 pips. I'm not interested in taking a 25 shot or a 50 shot there. There's no reason to do that. Good market structure, good symmetry, not bad trade at all. Now, if we wanted to take maybe a big trade and say, okay, I want to take a position here, I'd say, well, okay. Spike low, spike high. That would be your daily high. Maybe on tomorrow's trade, somewhere down around 155-ish. And if you go back down to your 4-hour chart, what does that look like? Looks like this area right here, that order block. That's what I would want to target. Do we get it? Don't we get it? I really don't know. But it's starting to look like we get a pullback there. That'd be fantastic. Remember tomorrow's FOMC minutes. So we definitely want to be aware of what we're doing with the dollar pairs. We're going to go ahead and preview that here in just a second along with the news of the day. So JD Adventures. Hey, Shane. How you doing, JD? Good to see you. Let me see. Ahmed, they announced $1 more trillion investments from the Saudi to be in the U.S. Well, that'll help. What's that doing to the markets? Brought a little short-term bump. Still, though, things are blood red over there on that board. The VIX, interesting, is fading right now. And then you've also got your U.S. oil. U.S. oil is fascinating, isn't it? We went from being right around scratch to 60 to up, now we're up around 60, 75, somewhere in that zone. So looks like there was a tit for tat. Like, okay, you invest $1 trillion and we'll buy a bunch of oil. Or maybe we won't produce as much oil. Or maybe we won't export as much oil. That was a big handshake. That was $1 trillion handshake. I love it. I mean, the way that the news, under the Trump administration, the way that the news moves the markets. Well, the last summer under Biden, which was before the election, I traded rotational strategies on the the E-mini S&P 500 and killed it because the market did absolutely nothing. It just went sideways. And it was just like, goes up to the top of the range, you sell it. Goes down to the bottom of the range, you buy it. It was easy. To be honest with you, I got a little bit soft. I wasn't my normal aggressive self in the market, so I sort of became complacent, soft, eating a lot of steaks, not getting enough cardio in. But it was fun to trade. It was fun to trade, and there was a lot there. All right, we got a few things to go over here. Let's go ahead and trade update. We're going to do a couple of these. Not going to dwell on them, though. This is one that we put out yesterday, that Aussie CAD. I just want to sort of highlight where we're at with regards to our entry point. This is sort of our entry point right around that 90-30 area. Right now we're trading about 91 flat. Love this trade. If we get an opportunity, tomorrow's a great day to get this one because if you get this trade tomorrow, You get to be completely disconnected from the U.S. dollar. FOMC minutes are going to weigh big. You're definitely. I'm watching this one as a potential diversification mode, a way to get away from the U.S. dollar and maybe grab some insulation from what really could be a chaotic FOMC minutes. We know there's going to be volatility, and the reason why is because we don't know what the Fed's going to do. And when we don't know something, the market moves. That's all there is to it. All right, markets plunge, a chance to buy the U.S. 500. This is one that we put out earlier today. Now, I've sort of been watching this pretty much all day long. In full disclosure, I'm in a contest right now, and I tried to pick the bottom today on all three indices. So right there, we've got the E-mini Dow, we've got the E-mini S&P 500, and the E-mini NASDAQ. This isn't bad stuff. Honestly, I just took a guess from a long-term, one of the long-term Fibonacci levels I have. One of the great things about that, trading in a contest type of a scenario, is that number one, you have to make these huge staggering amounts of money to even contend to win it. So it's, it's really more like a lottery when you're trading against that many people that are just taking guesses basically. But one thing you can do is you can take trades and work on your mental trade management because it doesn't cost you any money. So you get in there and you take a trade. I bought down here at the bottom of the US 500. The reason why, I'm thinking of a different way to sort of approach this orb. But this was sort of your opening 30-minute orb, right? What's happened? I said once we couldn't close beneath that 30-minute orb right there, I took the long and said, okay, maybe we'll rebound and get it back. Now, you're still fighting a big trend. We're still down yesterday, traded beneath yesterday's lows as well. So this market could still fall away. But if we did pick the bottom, it could potentially be pretty lucrative. So right now, we'll see where this trade is in another hour or two and maybe cut these off or maybe let them run into tomorrow's session and bet on a big rally. I don't know. Personally, when you're trading a contest, a great time to start out a new theory, but it's also a great time to work on your psychology. What is it like to really hold a trade as you watch the tote board go in your favor? If you want to work on a different part of your game, I recommend doing it with demo dollars or in a contest formation. You want to work on your psychology, get past some of those barriers that you've had. One of the things that I don't like to do is hold positions. I'm not really into it, but in a contest like this, you kind of have to. So I'm looking at taking. We'll see exactly what develops here later today. In any case, for the trade idea facing the US 500, something like this. This is interesting to me. This was sort of one that I put out that's going to be a big zone. If in fact this does get ugly for the rest of this month, and a lot of people believe it is, I'm not necessarily sure. It really is a downtrend. Something like this down here at about 61. It's not a bad area to be looking to go long. There's a lot of people that are going to look at that level and say, yeah, that's a pretty good zone to be looking at. So I figured I'd throw that trade idea out, although it's probably going to be more designed for the end of the year, but it could happen at any time. We're going into the holidays next week. We're going to talk about that Thanksgiving holiday. We're going to see a market closure. This could happen if the Fed doesn't cut interest rates and if we see some of the things that I'm going to talk about next. So this is interesting. I think this is a decent idea potentially to get a bid, and I think it's one that a lot of folks are looking at through the rest of the year, buying that pullback and riding it into the dovish policy of 2026. I think that may be the way to go. All right, week 47. Not really a whole lot to go over here. We've already done most of it. Quiet. Today was a low news day, low impact news day, but there has been something that surprised us that came out just sort of out of the blue, jobless numbers. And then also to Wednesday, UK CPI, those Great Britain pound trades we talked about. Be ready for the inflation data out of the UK. EU CPI as well. Those are huge. Anything that suggests inflation is coming up or down is going to move the markets directionally. Be ready if you're trading the euro and the Great Britain pound during tonight's London session or tomorrow's London session. If you're in London, be ready. Be ready. FOMC minutes tomorrow. We're going to have FOMC minutes trading live. Remember, the minutes are just a news release. All they are is just a paper that they're going to talk about what they talked about at the last meeting. I'm going to give you a few things that you need to look for, and then we're going to set up some trades and take all questions that you'd like to bring. Remember, that's not a press conference. They're going to do a press release. That's going to be a written thing. I'm going to tell you exactly how to trade it and how you need to approach the FOMC minutes. Very, very important there. Thursday, U.S. non-farm payrolls, NFP Live, baby. NFP Live. We haven't had an NFP Live in quite some time. I can't wait. Can't wait to get it on with the fresh round of job numbers. Now, remember, these are from September. This is the September jobs report. What do you think? Let me put it a different way. Do you think the powers that be don't know what's in that job report? No, they know. Believe me, they know. And this is one of those things that I always talk about. I said, listen, we're retail traders and we have a lot of advantages. We don't know what's in that report, and there are people that do. So we're going to be very careful with that, but I will comment on the details, and we'll talk about exactly what it means. Friday, S&P Global PMI and UM Consumer Sentiment. The consumer sentiment number is going to be a bigger deal than usual because we want to know the head of the American consumer and if we're potentially headed for a recession. I've been reading the R word all morning long. All morning long, it's been recession 2026, recession, 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 recession. And I go, all right, well, maybe it is, maybe it isn't. We do know that there's going to be some things that happen next year that are going to be big. They're going to be very, very important. So that's our news cycle for this week. As far as our news of the day, this is the reason why we opened way down. There's no question about it. These numbers came out in the middle of the night. My time, I believe they came out at like 5 a.m. Eastern. Nobody was ready for it. I had no clue that was coming out today. To be honest with you, I'm sort of walking on eggshells with our news releases right this minute. I don't know which way they're going to go. Something like this, though, continuing jobless claims came in bad, 1.9 million. That's above expectations of 1.93. You've also got additional jobless claims. That's the one that you have to watch. If anybody starts talking to you about jobless claims, don't worry about that. Forget that. Let the economists and the media people worry about that. What you need to think about is initial jobless claims. That's the first time somebody's going to the unemployment line and applying for benefits. First time. And that gives you a greater litmus test of exactly what's happening as far as unemployment rolls, what we can expect out of unemployment. These are bad numbers. These are worse than expected, but I don't even know where the projections came from. They just released them this morning. Continuing jobless claims. I mean, again, there's 2 continuing jobless claims. It's very, very disjointed, the data coming out of the government right now. You need to be very careful trying to trade it or read anything to it. So the ADP Employment Change Weekly. Now, what is that exactly? I've heard of the ADP employment numbers. Now we got the ADP Employment Change Weekly, and it's listed. What all these job numbers mean is that everybody wants to know what Thursday's report says. That's how big of a market driver labor is going to be this week. These numbers are peripheral at best, but they did move the market because they were all negative. And people came in and they said, okay, we're betting on a big down day here. Why? Well, why not? Why wouldn't we? Well, what do you mean? Well, we think that the jobs market is very, very bad. And anything that reinforces that suggests recession. And that's why your stocks open down. That's okay. I mean, it's not a big deal. Is it important? No. What's important is Thursday. That's what's important. So you definitely want to keep an eye on that stuff. Interesting type of a situation. The thing that I've been watching all day has been the Swissy. You can see right here, this is a daily chart on the Swiss franc. Typically, these Fibonacci retracements are very, very stiff, meaning they're very, very good when it comes to the Swiss franc. And this is a nice big daily move. Look at that nice big range. And then right there, what do you have? Well, you got a situation. You went right to 50%. Now you sold off. You broke right through 38%. So at this juncture, if I was looking to tick scalp, it would be something like this. A little bit of a hesitation there at 38%. I mean, your 38% level was 79.72, and then your low there was somewhere around 79.61. So that's a tight scalp. You probably want to end up being long here, believe it or not, off of the pullback. Swissy's interesting right now. I don't know that I don't really know what to make of it. Typically, you'd be looking for safe havens when we get into the news cycle that we have, but we're not. We're taking the dollar over the Swiss franc. Fascinating stuff. Interesting. Okay, let's see. Let's see. Tina, that looks like a good day. We'll see how it pans out, Tina. Honestly, it's not really enough. It's not really enough to make a real challenge in this contest. But we're going to let it run. I can tell you this: if we trade back and close near even for stocks, it'll be a monster day. It'll be a really big one. Let's see. That is another way of orb usage. Interesting. That's a challenging one though, Tina. I don't know. I think that if I was going to do something like that, I would refer to my pendulum strategy. Not my pendulum, but Mario Singh's pendulum. And we cover that in the Trading Academy. That's more of a rotational strategy, but the orb strategy is interesting when used, sort of as an idea for compression. These aren't new ideas, but they are interesting. That's for sure. Let me see. Are you making real money for the contest? No, that's not real money. If I was up $7,000 or $8,000 on the day, I'd probably still live stream because I like talking to you guys and all the traders. But I probably wouldn't be showing it. I'd be too nervous. That's a lot of money. $8,000. Hey, listen, I've been in this game a long time. $8,000 in a day. There's not too many folks out there that are making that kind of money. I'll tell you that. And that's pretty big stuff. So it's not real money. Could you please repeat the 4 market drivers again? You took the words right out of my mouth, Tina. Let's go ahead and get to it. Okay, news cycle number 1. Your market drivers, this is the Epstein vote. This is going to be a pretty big deal. We're seeing it across all the news. Is this a potential market driver? Yes, it is. The reason why is once this list or these files get released to the public, you're going to see a lot of news. And there's going to be a lot of it that's going to be facing the financial sector. Now, whoever's implicated, I don't know. I'm not even going to talk about it. I don't care. But what we do know is that major hedge fund people, billionaires, people that run companies, some of them are going to be implicated. And a lot of times the rumor can just drive prices crazy. So you brace yourself for the volatility. It won't last long. But there will be something crazy, and it probably will be a stock specific, fund specific, maybe a certain bank. Who knows? Be ready for that, though. That's a potential drag. Venezuela, number 2. You can see that everything's sort of loading up, and they want to bar military action in Venezuela because they know it's imminent. We've already seen big protests in Mexico. If you're in that region, then you know what I'm talking about. There was big protests in Mexico City yesterday that were sort of against the sitting president down there. A lot of people believe that's related to Venezuela because it all has to sort of tie in with the cartels. I don't know anything about it. I do know this. There's a lot of military armor down there, and Trump's talking about negotiating with Maduro. That's basically negotiating an exit. So we're watching that closely. That will send your crude oil prices higher. It may even drag stocks a little bit. Really, really tough to say. I mean, anytime you go to war, typically it impacts a lot of different sectors that can impact the indices as a whole. I'm watching this situation closely. I don't know that it happens this week. I think that if you bomb Venezuela, or targets in Venezuela, right after these Epstein files are released, that's going to be too much of a political firestorm. I always say that I expect military action on weekends. That's when I expect it. Potentially this weekend could happen. And this is another one here. Saudi visit right here. Trump hosts Saudi Crown Prince on pomp-filled deal-making visit. That's a big deal. It's a big deal because of the foreign investment that we just heard from Ahmed. It was more than $1 trillion. So pledged $1 trillion. Trump's done a lot of these deals. The foreign direct investment clearly has propped stocks up a little bit off of their lows today. The real question is what happens to oil prices now. You're starting to see them settle back down to 60 just since we've been talking. Boy, 60 is a tough one to get away from. So essentially, that's the news cycle here. Now, your 4 market drivers, as we move forward, are going to be relatively simple. They're going to be what? They're going to be Fed policy. That's going to be the first one. Do we cut rates? Don't we cut rates? Number 2 is going to be a lot of this political stuff. It's going to be Venezuela's definitely a hard 3, but this Epstein stuff, that's going to shake the markets up momentarily. And who knows exactly what's going to happen, but that's got to be figured as a market driver. And then pretty much, I would say one of the bigger ones, that we're not really talking about, it's the data. We've had CPI delayed. We've had NFP delayed. Those delays bring uncertainty. And now that we're going to start dropping these numbers on the market, they can be interpreted any number of ways. Right now, Wall Street believes that the jobs numbers are going to be going down. They believe that you're going to get a negative print. Here's the thing. We're not just 1 jobs report behind, we're 2. So they're going to release September's jobs numbers Thursday. It's November. Okay, in early November, we should have already seen October's numbers. We're 2 months behind. So I'm not sure when these guys are going to make these numbers up. Are they going to release one then? And then are they going to release another one next Friday? When are they going to do all this stuff? So is there any point even releasing the September's jobs report? I don't think so. I would move on and I'd say, well, let's go ahead and let's release, October's. But they're going to release it. So we have to brace ourselves because nobody knows what the heck's in that report. I mean, nobody. One of the things that we definitely have to be aware of is potentially what can happen if there's something crazy in these reports. If there's a negative 100,000 jobs, if there's a plus 500,000 jobs. And people laugh at that. Basically, the baseline, they believe that it's going to be like a negative 50. What happens if it's not? What happens if it's even? Remember, everybody at the BLS got fired before we shut the government down. So you've got a new set of people that are keeping the stats. You've had a government shutdown that really has derailed our data flow. Nobody knows what's going to be in that report. So let's say September comes out better than expected. Then where's October going to be? How about the backward revisions to previous numbers? You see, there's way too many questions. I, I'm very, very, very cautious about this NFP report. I think that you're going to see some real fireworks. Maybe we're already seeing them today. Our bearish market reaction is it's predicated upon, number one, that Epstein vote, and number two, what's going to happen here potentially with those negative jobs numbers, in my view. All right, let's take a look at some markets. US dollar, Canadian dollar. This is our 920 EMA crossover. The red one's the 9 EMA. The 20 is the blue is a 20. The red cross is under the blue. There's our big code. Our coded it comes up a purple candle, and that's your sell. So I get a lot of questions. Shane, I like to trade the 920, but my entries, my time frames. Forex pairs, the daily chart's great. The 4-hour chart's great as well. Pretty good. If you're trading in a highly volatile liquid time, 30-minute charts are pretty good. You go any lower than that on the Forex, you just be ready. Your stop losses are going to be tight, and that's great. But just be ready. Be ready to take some losses until you finally get in on a big runner. Big question I get a lot, Shane, where should I go in? Well, our traditional entry is going to be something like this. It's going to be right on the close of our signal bar there, right? So that's going to be your sell. Well, could also do that. Could also go from the lower extreme, maybe. Pull back. I've heard several traders that have said, hey, listen, I wait till it pulls back to the moving averages because it almost always pulls back to the moving averages, right? That's nothing wrong with that. I don't have a problem with that at all. I think right here, if you were to get a pullback right up in this zone, this 140 area, like by the end of today, that's a pretty strong trade. That's a pretty strong trade. So I'd be watching that closely there in that dollar CAD. Remember, if you are taking that trade, you're going to want a stronger crude oil market as opposed to a weaker one. So there's nothing wrong with that as well. All right, we did talk a little bit about some futures. Let's go ahead and go to the E-mini NASDAQ futures and see exactly where we're at. 920 crossover, 4-hour, probably not what you're going to want here. You're going to want either a 30-minute or a 15-minute, and you can see right here on the 30-minute, see these bars down here? This is volume, and volume's a big deal in what I like to do. I like to trade when there's a lot of volume. In my view, when there's no volume out there, you really don't know what price action's really doing. However, if you went into that session right there, that's yesterday's session, pre-session sell, you crushed it, right? So what are we looking at now? Well, you've got a situation potentially to get that crossover towards the end of the day and maybe look to take that swing long. That's kind of what I'm thinking could happen here, but I don't necessarily know. Nobody really does. The market has definitely tightened up here in the last hour that we've been talking, or last 30 minutes and the 30 minutes previous, because, I mean, that meeting with Saudi Arabia is a big deal. So this right here probably was your announcement on the $1 trillion direct investment, and now we're still sort of sorting through exactly what it means. This crossover here on a 30-minute, though, during the U.S. session, that could be pretty good stuff. That could be a pretty big deal. I'm watching that closely. Maybe later in the day, take a potential shot at a swing trade long. Hard to say. We just got to sort of wait and see exactly what happens here. As far as any breakouts today really wasn't a breakout day. If you wanted to go to just an orb strategy, like here's your US 500. Let's go to our 15-minute orb. Something like this. Interesting. Let's go on over to our orb template. This is sort of a, ignore those levels. Those aren't set up correctly. I'm still sort of working the kinks out on this thing. But one thing that we are sort of looking to build, those of you that like the orb, we definitely sort of had a little strategy, designed a strategy here and ran it on this trading view. And then you've also got your Pine editor, which we've got a potential script here that we're working on, or that I'm working on, that might actually help you guys spot your orbs. And it lights up the first two candles of the session, and then it also draws your orb box, sort of extends it left to right as we go. But what I want to do before this thing's even remotely ready to release is I'd love to get it to mark the key levels as well, and then you'll have sort of an all-in-one. But thus far, I mean, on the back testing, I have to say, this is just very rudimentary back testing, but been pretty good. I mean, the P&L is positive. Total P&L, I believe, is 338, something like that, and that's just on a fractional pip. You can see 71% profitable trades. That's great. 429 trades, profit factor of 1. So that's something that really is sort of proves what we've been talking about on the orb. But I'm very highly skeptical of anything that has to do with back testing. And Maybe I'll give a back testing workshop or something. the Orbs Pine script, I want that. Yeah, Tina, I'm working on it. I don't know when I'm going to get to it. I'm looking to get it completed, in the next several days, and then make a video and get it out. But it's something that I've been wanting to do for a long time. There's some other things that I'd love to translate into EAs so you guys can put it on MT4 and MT5. There's a lot of challenges with that. Specifically the timing, everything's coded in GMT, I believe. So coding those transitions into the MQL5 language is problematic. So we'll have to take a look at it, that's for sure. All right, let's see if there's any other markets you'd like me to look at here. This is the futures and Forex market scan. Let me see. Ahmed, Shane, can you take a look at the DAX? The German 40 on the weekly Fibonacci looks good there. Yeah, let's go ahead and take a look at the DAX. Have absolutely no problem with this. Let's see. Weekly 38%. Okay, so the weekly 38% is probably going to look something like this. We're going to be looking at a yearly range. So Ahmed, always remember when you're looking at these waves like this, also you can think of it. You can think of it with regards to time frames. So let's say you get a big spike low like this. That's the yearly low. That was back during the tariff crash of April, right? So there's your comeback. And then there's sort of your top up there right around 25,000. So that's a pretty astute, look at what a viable 38% would be. Now, as far as that's what I would be interpreting as a weekly that I would be looking to use. Now, as far as can you sell? Of course you can sell. You've got a big negative week right here, right? And you're potentially looking to get a breakout going. So I really don't have a problem with selling. The thing you're going to have to do is dial this down to a different time frame, and the daily is exactly what you want. So something like this. There it is. So your pullback zone right there is 23,621, something like that. 23,076 is the bottom. So maybe a pullback from this recent spike low could set you up with a pretty good trend following play, which is exactly what you probably want to do there in the short run. So if you're scalping, you're tick scalping, you're looking to take small points, something like this could be pretty good. Now, as far as big picture, it's hard to argue with this attacking this yearly range. It's damn hard to argue that. Really hard. That's a beautiful entry down there. I think buying that 22.5 zone, 22.750, it's going to be really tough to beat that type of a trade location to the long. If nothing else, you're just going to get a little bounce in there. That's really all you need if you're tick scalping, if you're looking to make small points. That can take you a long ways. All right, so let's go ahead and there's one last thing that I do want to check out, and I promised it earlier in the stream, and I lost it. Dollar yen. Okay, right there you had a bid on the 30-minute. Probably wouldn't have taken that. That was during the London session. Not a bad one, though. It didn't stop you out, and you got the big move during the U.S. session. But let's go to a 4-hour. Yeah, the party already started without us, guys. Elvis has left the building. So as far as how I would be looking to trade this thing right now, this dollar yen, I mean, it can be problematic. Something like that. You just got to be able to get the pullback. That's the key. All right, everybody, let's see. The dollar DXY. Let me see. Tina, I have seen a girl also trade orb. She has some called magic lines. I have some magic lines of my own. Typically, when you call something magic, you don't want to disclose what you're using. I have range formulas and things that I apply where I understand exactly where the market should go if it breaks bullish or bearish. Those are extremely proprietary. And I'm not just saying that. You can't disclose it or else end up in court. Let's see, the dollar index. Let's look at the DXY underneath the framework of this 920 EMA. Interesting. 4 hours. Definitely want to look at that on the 4-hour time frame. 4 hours, sort of your bid there. From 99.40, really haven't gone anywhere. Let's go do a daily. Interesting. Starting to break a little bit positive daily. As far as what I would be looking to do with this product. This is clear cut for me. I mean, this is about as easy as Fibonacci's get. Spike high right there. Sort of got a triple bottom down there, dirty triple bottom. It's not real tight, but that low right in there, 96 and a quarter, something like that. Now your pullback, you got a 13-period EMA up there right at 100. You're selling 101.50s all day. So this is what I would say. Even if the Fed doesn't decide to cut interest rates, that's probably the top. Somewhere in there. I like that a lot. I think that's a fantastic technical level. It's one I would definitely be looking to short, 101.50, somewhere in there, 101 even on the dollar index. But the biggest thing to take away from this type of analysis on the dollar index is this. You're in a downtrend. It's an L formation. Massive downtrend. And now we're moving sideways. Top of this thing still 38%. That's extremely bearish. And, the biggest thing to remember about all these technical tools and all this stuff is understanding how to interpret them. Listen, since this low right in here really developed, we've traded pretty much sideways 1, 2, 3, 4, 5.5 months. That's half the year. So you've got the big runner here, right? So there's your big negative runner. Boom, boom. Now what? Pullback zone, 101.50. Bearish, L formation, boom, boom. So I'm still saying that my calls for a dovish dollar, I think as next year develops, you're going to see that. It's almost a guarantee. The real question is how low does the U.S. dollar go? And where exactly does the U.S. government want the dollar? Do they want it lower? I think so. I think they want to try to inflate away the debt. The debt's sitting at $38 trillion. Just the debt service on that debt alone is what? How much does it run in a year? Something crazy, 4 trillion, 3 trillion, 4 trillion, whatever. So the only way to really get rid of debt, I don't know, I could take you to the Trump School of Economics if you want. The only way to really get rid of debt is a couple of things. Number one, you can make your country so valuable that the debt looks small in comparison to your output. All right, that's basic economics, but that's how business people work. I was in the real estate arena, nowhere near the level that Mr. President Trump was, but I can tell you this. I knew it, no matter how high our debt got, as long as our assets were worth a lot, we were in great shape business-wise. We were liquid, we were solvent, we were viable, we were a good bet. The problem is when that top side value comes down and that debt hasn't moved much, now you're not so good of a bet. And you go down to the bank, and you better be 3 or 4, 5 to 1%, 500% your value to that debt. As soon as that comes down to 200% or 150%, then they get out. That's the way that game works. The way that essentially they're going to run the country is going to be the same thing. I mean, it's going to be the same thing. It's going to be, okay, we're going to make the country extremely valuable. We can live with a lot of inflation because that's going to, if we owe $38 trillion, but a dollar is not really worth anything, well, then what is the $38 trillion worth? That's how the game's played. The problem with the inflation is it absolutely kills everybody. It kills the middle class. It kills the lower class. Even the upper class starts squawking. So you really have to watch out about how to play the inflation in the debt game. In many ways, it is a shell game. But that's what we're in for in 2026. The next Fed chair is going to be a dove. The new FOMC members, remember, they're going to turn over 12 of those in February. The new FOMC members are going to be doves. They're all going to want to cut. And if you want a case study in what can happen in this country to the U.S. economy, you take a good look at what happened to Japan when they sort of went into, okay, we're going to devalue the yen and we're going to play the foreign investiture game. That's what we're doing. That's why the Saudis are at the White House today. And I'm not saying that it's wrong or what it means. I can tell you that what it means to the market is you're going to see prices on everything in the United States pretty much stay the same or rise. That's a given. You may get a big downturn in energy, and I think they're sort of banking that that's going to hedge inflation. Your stock market's going to be positioned to go up. It really will. As inflation takes hold, you're going to see things like gold and silver go up. That's just part of the deal. What do you think Bitcoin's going to do? It's probably going to go up. Crypto, probably all going to go up. The government is now in the crypto business. It doesn't really matter what we think of these people or what they're doing. It's what is happening. So we, as traders, we align ourselves with the best opportunity to win. And if we don't do that, we're not very good traders. So I'm going to write up some things at the end of the year. We're probably going to make some videos, predictions, sure to go wrong or whatever for 2026. But if we go down this dovish road, you're probably going to see some stocks churn to some historic levels. They already are. You're going to see commodities probably rise, and inflation is going to remain a problem until somebody addresses it. That's going to be the deal. Let me see. Tina, have you mentioned that's sort of why the dollar is so bearish? Have you mentioned the German 40? Yeah, we just looked at the German 40, Tina. I can do it again, though. I'm pretty easy to work with. All right. German 40 right here. Spike low, spike high. This is your yearly range on the weekly. That's a huge level right there. 22.5-ish is a monster support zone. I'd be watching that for the rest of the year. And then as far as my dailies go, if you wanted to take a short and get involved with a little bit of meaning, I don't have a problem with this at all. Something like that. Like that there. That's what I would be looking at. So pretty good stuff. I mean, if I had access to the Germany 40, the DAX CFD, that's what I would be looking at. No question about it. All right, everybody, let's go ahead and see what our positions are doing today. Let's see. Yeah, we're doing all right. We're up a little bit. I really would love to see this thing break, this tote board break into the green, and I think that it can. If that is to happen, then this day turns into a big one. And just full disclosure, this is just a contest over at TradingView. I'm not going to advertise for them, but I like getting into contests and screwing around a little bit. To win one of those things is, almost impossible because you're going against so many other traders and everybody's sort of throwing darts at a board at some level. But, I always do that to sort of work on my game. We'll see. We'll trade a few days and see how it goes. As soon as it starts going bad, we'll bet it all and lose and get out probably. Let's see. The markets have been choppy today. Yeah, absolutely, Kirat. Good to see you too. New name. Welcome. Markets have been choppy, no question. Too much news. Get your crystal ball out, Tina. Yeah, I probably should. Team Marina. Didn't Jamaica just officially declared its switch to using digital currency? Jamaica's interesting. I actually had a friend down there, believe it or not, and the latest hurricane was devastating. It was absolutely devastating. But what Jamaica, at least what they're thinking from a national standpoint, I believe is a lot what El Salvador did, where they went into Bitcoin heavy as being a potential national currency. And those folks, I mean, they really are on the cutting edge, but they saw what happened in El Salvador, and it really started to grow the wealth, and all of a sudden that domestic economy became a lot stronger. So I think that for developing nations, which is pretty much what Jamaica is, depends a lot on tourism, a lot on certain facets of their trade. If you go into these digital currencies early on, and it really, realistically at the national level, adopting digital currencies is very, very new. So the idea would be for a developing nation to get into that early. And then as that thing, sort of explodes, you're going to have a lot of different ways to do business. You're going to have a lot of different ways to sort of build the value of your nation sort of through that environment. Will it work? I don't know. I would absolutely cringe, if countries just started diving in completely into crypto and then we saw the big rug pull. I would hate that. I don't want to see that for anybody because, when things go wrong at the national level, it really does trickle down to the people. There's no two ways about it. So we're watching that closely. It's a great point, T. I mean, does institutional adoption of crypto mean governments? It has to. At some level, it has to. And the real thing that a lot of these folks are fighting with is, okay, we've got digital currencies. We've got the technology to do all these different things. Does this lean us, one step closer to that centralized digital currency that everybody really cringes about, the CBDC? Is that what it's called? Central bank digital currency? I don't know. I don't know how any of it works. I don't know. I really don't. I can tell you that there was a major Cloudflare outage here in the United States. It was one of the biggest server outages of all time today. I couldn't get in the How to Trade trading room for about an hour. Couldn't get on X for about an hour. And the reason why was the Cloudflare servers over in Seattle crashed. They'd never had that happen before. Was it hacking? More than likely, yes. So if you can start hacking infrastructure that is really entrenched and robust, what happens when your central currency, your digital currencies get hacked at a national level or a large scale? I don't know. I think it's a great question and probably a case study for people a lot smarter than I am. All right, everybody. I've droned on long enough today. Great session, though. Thank you for all the questions. Thank you for showing up. Really, what we're watching now is we're going to see the Epstein fallout. I'm done talking about it. I'm so sick and tired of hearing about this stuff, but it's going to be a factor, and I would be dishonest if I sat here and told you that it won't move the markets, because it probably will. It just doesn't. We don't know how. I don't know how, but it may move things in a big, big way. It may not. Venezuela is also on the board. I think we're looking more towards the weekend for any developments there, but that can come at any time as well. And then also the talking points from the Saudi visit to the White House are going to be interesting as well. I'll be consuming all of that news during the overnight. Tomorrow, join us on all these channels, wherever you're seeing us right now. We're going to be back 1 p.m. Eastern time. So we're going to start at the same time today. FOMC Minutes is out tomorrow at noon. We're going to get in there. We're going to kick the tires. We're going to see exactly what you can expect for that release. And I don't know, we may actually sit here and read it on air and try to go over it and maybe make a few trades. That really is up to you, though. Whatever you guys want to do, just feel free to drop me a message on over at the How to Trade Trading Room. I do appreciate everybody joining, though. We've got an interesting set of interesting things planned for the next year or so with this Switch Markets How to Trade community, and really trying to deliver as much value as we can to you. It just depends on really what you guys want. If there's anything you can think of that you want, go over to How to Trade. Click send me a private message, and I'm more than happy to review it and see if it's possible. I understand that we are in the era of video and podcasts and all these things, and there's a million people out there that are making videos and they're doing podcasts and they're telling you what to do. Well, what exactly do you guys want? I feel like we have some pretty good learning materials over at How to Trade, at least to get you started. These live streams, I admit they are a bit more advanced. They really are. And I can certainly do beginners live streams and things, but for the traders that are sort of in the markets every day, I would much rather deliver content that I think is useful. But if there's anything you guys want out there, just let me know, and we can see if we can build that in, whether it's, cheat sheets, whether it's, new tools, new EAs, what exactly the area of study would be. I'm more than happy to delve into it. And if I have enough expertise to deliver a product, I will. If not, then I'll try to point you in the right direction. That's for sure. All right, everybody, I'm going to go ahead and sign off for right now. You're absolutely welcome, Bobby Bob. Good to see you. Tina, let's see. People are trying to get me into XRP. I don't know. We'll talk a little more crypto tomorrow. I'm really watching Shiba like a hawk, Shiba Inu. I think that this could really be a comer here, but we've got to get a good price. This day right here, back in October, that's the kind of action that Shiba can give you, where you just get that big sell-off. But as soon as you get if you get a good price on it, you got a chance to get really a healthy dead cat bounce. But we're nowhere near it yet. We've got to get a good healthy price on that, and we may this week. It just doesn't. We don't know. All right, Lewis, you're absolutely welcome. Oh, Tina, thank you. You're one of the only genuine ones. Yeah, that's what I aspire to be. I'm not going to sit here and BS you and tell you you're going to have a private jet or a big race car. I will tell you what's possible in this game. You can build yourself into an edge, and you can make money consistently. That is very, very possible. So there's a lot of people out there that are going to tell you that you can't just because they couldn't. Well, listen, there's a lot of reasons why 95% of the people supposedly wash out of this industry. Why? Discipline, patience, not having enough money, undercapitalized. There's prop firms now. You don't have to be undercapitalized. That's possible to get money now. When I started in 2011, that didn't exist. There was one firm out there, and they came along a couple years after I got into this. Okay, so that didn't exist. What happens now is if you're good and you have the chops, you can go find the money to trade, and that is huge. All right, that's the first thing. So being undercapitalized isn't as big of a deal as it used to be. Let's get that straight, number one. Number two is the patience and the discipline. All right, discipline's hard. It means you got to stick to it, and honestly, it makes trading really boring, but it's the truth. If you're disciplined, you've got a shot. Very few people are disciplined. If you can be disciplined, at least at this. I mean, even if you're not doing other things in your life 100% disciplined or correct, or maybe you like this, that, or the other, or whatever. But if you can be disciplined on these screens, then you can, okay, that's one more thing you can do. So you can get money, you can have discipline, right? The next thing is you just have to be consistent. I get asked the question almost daily about trailing stops. It's always the questions always come when the market's really live, when we're seeing big moves and people want to lock in moves without giving anything back. And they say, Shane, trailing stops. And I go, well, trailing stops. Okay, what about them? Can I use a trailing stop? And I said, of course you can use a trailing stop. Should I move my stop loss to break even? I go, of course you can do all those things, but you have to be consistent. You have to do it the same way every time. You have to. Now, that's not to mean that, hey, listen, if I'm in a gold trade and then I'm in an E-mini trade and it goes 5 ticks or 5 pips or whatever, now I snap it. I do that the same for every market. No, that's not what I'm talking about. I'm talking about for your trade, for your gold position trade, let's say, where you're risking 100 pips to make 300 pips. When you have that type of trade, you have to execute it the same way every time you have that kind of trade. That's the only way you're ever going to understand if you're good or not. That's the only way to understand that if your strategy is going to work, because the time that you don't move your stop loss to break even, or you don't put a trailing stop loss on, then you come back and you take a loss. And then the next time you decide you're going to move your stop loss to break even, then what happens? Well, you probably get stopped out at break even, right? And then the next time you decide, okay, I'm going to put a trailing stop on, and then you get stopped out on your trailing stop, and then the market goes to the moon. Consistency, consistency, consistency. And I'm telling you from personal experience, consistency starts right here. It starts in understanding your management strategy and what you have to do to be successful in your own mind. That is where it all begins. It all begins with your psychology. It starts with, am I okay trading like this? Can I make this trade and be okay with it, win or lose? If I move my stop to break even right now, am I going to be okay with it if this thing comes back, stops me out, and goes to the moon? That's what this game's all about. Do those things, and you can be successful. Don't let anybody tell you can't be. That's it. So if you see me on a private jet, then you know I've sold out completely. But those are the things I believe, and I'm telling you right now as a fact that you can do it. It's not going to be easy at first. It gets easier, but you can do it. All right, everybody, that's a wrap. I've droned on long enough, about another hour. Man, we're doing hour-long sessions these days. Interesting. Okay, have a fantastic trading day. If you need anything at all, I'm over at How to Trade. Reach out, send me a private message. I'll be sure to get back to you in short order. We do have a new market analysis video out today over on Switch Markets at YouTube. Check that out as well. We do go over a few of the things that we talked about today as well. All right, everybody, have a fantastic trading day. Watch that news. Trade the action well, and we'll talk soon. See ya.